Hello, guys. Welcome back to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. Hopefully, you guys are doing great and earning a lot of money from the market. Of course, hopefully, you guys are in a great health too. All right. Don't let the pandemic stop you from moving forward. So, today I'm going to share a trade. All right, a fantastic trade, and not only I'm going to share how you approach this trade, there is something very sinister about this trade that you guys have to be aware of. So, as usual, I usually will focus more on gold, XAU, USD. So over here, what we can see is a daily chart. All right, daily chart. So last week the price was moving quite fast, uh, up. All right, moving quite fast, uh, bullish. Sorry, moving quite fast, bullish. So eventually, on the left hand side over here, right? Over here, actually, we have a pattern. I'll draw it like this, right? This pattern is something we call as a manipulation. All right, it's a manipulation. Means that before the big drop. All right. So if you look at it properly, the price move in range, right? Move in range, top and bottom before it comes up to the top over here, right? It takes some order and then plunge down, right? Plunge down. So over here you can see that the candlestick, one, two, three, four candlestick are moving in range, right? Moving in range before it goes up. We call it the stop hunt or manipulation before the punch down, right? Punch down. So similar with this. So this is a very high potential way of trading. All right, very high potential way of trading. So what we do is that we will label our supply and demand. Of course, if you guys know how to make your we call it the MPL, maximum pain level, the line, right? That it will be somewhere around here, right? You can see that the price is moving in range over here, and of course, similarly, the price plunged down at this point. All right. So if some of you do not know how to approach this kind of trade, I'll show you some confirmation and something that you need to be aware of. So over here, we know that there is one supply zone, fresh supply zone. Let me label it. So this is your supply zone. All right. This is your supply zone. So how do you make a confirmation? How do you get a confirmation? Right. So I've shared with you guys before that one of my favorite area of trading, of one of my favorite uh, method of confirmation is that there is a QML inside this price when it move into this zone. If there is no QML, then I will not trade. One of the reason is that because if you look at this zone, this is over 150 pips, which is I'm not going to take this risk. Even though I'm in the right direction, I'm not gonna trade it. Right, I'm going to reduce it as small as possible. Right, so we switch it to smaller time frame. So what kind of small time frame are we talking about? Any small time frame, really any small time frame. So we go from the large to the small. So first of all, once we go into small time frame, a lot of us will notice that there is two area. One area is over here. All right, I'm going to make it different color first. Sorry for about that. Orange. All right. So one of it is over here, this zone, right? This zone, right? So if you see the price when it comes into this zone, right, it gives you a nice rejection, right? A nice rejection. So it's either you got into a break-even trade, all right, a break-even trade, or you got stop out, all right? It's up to you. But there is something sinister about this zone, all right? So let me show you. So if you move it into small time frame, even small time frame, maybe uh, H1, you cannot see anything over here. So M30, same thing. So small time frame, M15, all right. So over here, now let's focus about this area first. All right, let's focus about this area before we will talk about the higher time frame over there. No, the higher level over there. So if you look at it properly, A lot of people will argue to me that there is a possible QML over here. All right, it does not matter how you look at it. There is a possible QML because it breaks this structure, this tiny little structure. All right, let's switch to even small time frame, M5. Right, some people argue with me. You break this structure. This might be the QML. Break this structure. All right, then there is a possible trade over here, all right, this zone, or maybe higher, depends, right? So what is the sinister things that I will talk about over here? So if, even though if you consider this as a QML, one of my method of avoiding stop loss, or should I say is reducing my risk, is that I always put a line, a horizontal line on top or somewhere around this head. All right. So let me get all this thing out first. So once I put a line on top of around this head, I will usually will look to the left and see does it collide with any other uh, resistance in this case. All right. So at this moment, no, 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 no. All right. So you can see that it collides with a resistance over here. Exactly the same point. You move it even higher, right? Exactly the same point. So this is a very, very risky trade. Why? Instead of becoming a trade itself, this is a confirmation. What confirmation do I get from here? This is a pattern we call it as the diamond. All right. A diamond is a pattern that is what we call as a fail QML. Right? It's a fail QML. And not only that, it serves as a fake out. All right. So let me do it here. All right. Higher time frame. So as a QML, as a fake out. So if you look at it properly, this is S1. So sorry, resistance number one. R1, this is R2. So this is fake out. All right. And the price comes up, tap into the zone and then fall. All right. Tap into the zone and then fall. Of course, it's going very nicely. But how you gonna go into this trade? All right. How you gonna approach this trade? Reducing your stop loss. Previously, we are talking about 150, right? Yeah, 150. Let's assume it 150 trade pips. So M5. So you need to monitor. All right. You need to monitor. And you can see that as the price move into this area, further up into this area, right, there is a QML, right? A very, very beautiful QML moving. Let me do some simple labeling for you guys. So it's high, low, high, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. All right, ultimately the price drop. All right, and broke this low over here, 1 and 2. All right, even 3. All right. So how do you approach this trade? Very simple. All right. So we now know that it already break all this low. All right. Let me get this line out. Sorry, that. All right. So you can see at the birth of this movement. All right. There is one place that is so beautiful. This supply zone. All right. This supply zone over here. You might make your stop loss over here, above here, or some of you feel that it's a bit risky. You can make it even bigger until here. All right. So as the price move into this area again, this is where you're gonna place your sell limit, or you can make it a direct trade. All right, because your stop loss has been reduced from 150 pips to 11 pips or 12 pips. Can you see it? So this is how I usually will approach my trade. I want to reduce my risk as small as possible, right? So once I have reduced my risk, okay, I know that I'm in a good way, in a sensible way of trading. I know I'm doing what is correct. All right. I don't simply dive into a trade. So happened was that the price came into this area, tapped into this area, and then dropped. All right, drop all the way, which give us a very, very beautiful R&R, the risk reward ratio that is around 1 to 25, 1 to 24, somewhere around there. All right, somewhere around there. So first, you must know how to approach the trade slowly, slowly giving yourself some reason, some valid reason, right? And then secondly, try your best to get as small a zone as possible if you can do it. And of course, over here, there people might, I believe a lot of you will ask me, why am I taking this zone? All right, why am I taking this zone and not this zone over here? Right? A lot of people will argue. So very, very simple. So if you put, every time I have doubt, I usually will put one line, one horizontal line, right? So if you put your horizontal line over here and you put your horizontal line over here, okay, you can see that the price reject it at this zone more beautifully. This is what we call as a SSR. All right, SSR. It's not all this small rejection. There is a sharp rejection over here. You see the price move into this area. Of course, uh, don't call it the shadow went up, but it plunged down nicely. You see, it goes down nicely. So this is a more valid or more reasonable place for you to place your supply zone, right, for your trade. And the price really moved into this area nicely and then punch down. So I felt that this video can serve as a way, I mean, example for you guys to see the confirmation and also how to avoid unnecessary stop loss, all right, such like this. All right, so just be careful on your trade, especially on gold. And hopefully you guys learn a few tips or tricks on this video. So if you guys like the video that I made for you, please do give me a like and do subscribe so that I know that you guys are enjoying my video. All right, so see you guys next time. Bye.